Welcome to this week's edition of Market Outlook. I'm your host, Derek Taylor, also known as DT. Market Outlook is a weekly podcast where I take a look at last week in the market as well as previewing the week ahead. I also share some potential trade ideas. I talk about some potential options trades that I think are interesting for this week. Now, this past week, what were the major stories? Well, the major story was that the market sold off in a big way. And what was driving that? Well, a lot of that was just the stock market volatility mainly being driven by AI-related anxieties. The AI stocks saw sharp declines. A lot of the chip stocks saw sharp declines. We also saw NVIDIA report pretty good earnings, and NVIDIA had a nice little bounce Wednesday afternoon and into Thursday morning. Thursday morning, the market rallied in a big way on those strong NVIDIA earnings. And then like later that day on Thursday, we saw a sharp drop in the market. It's like all of a sudden the switch was flipped. And, it was just an ugly week for the stock market. It was also an ugly week for crypto as well. We got a little bit of a relief rally on Friday due to the New York Fed president mentioning that, hey, that interest rate cut that you guys seem to think isn't going to happen in December. Well, I think it is going to happen. And the market rebounded in a big way. The market reacted in a positive way because the stock market really wants that December Fed rate cut. When we've had these high interest rates for a long time now in the market, you're going back 4 years now because we're about to be in 2026, right? We've been waiting for these Fed rate cuts. We got that 50 basis point cut a while back, and then they promised more, and then they backed off, right? Jerome Powell kind of backed off, and it was Jerome Powell that really spooked this market. Ever since that last Fed meeting where Jerome Powell made that comment, hey, you may not get that rate cut in December, that is when the market really started selling off, and it just has never stopped. Another reason why I think the market is in a little bit of trouble and why we've seen a lot of weakness here in the last month or so is because of Bitcoin. It's the crypto markets, right? Bitcoin has really sold off. Ethereum has really sold off. And so much of the stock market these days, so many companies are invested. They're tied to Bitcoin, especially in a big way, including some of the largest companies in the world. So as long as Bitcoin continues to slide, and it continues to slide, right? Bitcoin actually fell to new lows this past week, deepening its decline from recent record highs because it wasn't that long ago that Bitcoin was trading at $120-something thousand, right? And, it got into the 80,000s here in the past week. So just a really nasty move in Bitcoin. And until that move reverses, until that finds a bottom, I think that is going to seriously weigh down certain companies, some of which we will talk about here in just a second. But first, let's talk a little bit about the market indices because that really is the story. It's just the weakness in the broader market. So let's take a quick look at the SPX, which is the S&P 500 index. So the SPX finished on a percentage basis. It finished the week down 1.9%. So just basically a hair under a 2% down move if we're measuring from the previous Friday's close to this Friday's close. We saw a drop of about 131 points in the SPX, which is about a 2% move. It wasn't all that long ago that the S&P 500 was making new all-time highs. The SPX was trading at 69.20 just about 3 weeks ago, and now it's trading at 6,600. So it's more than 300 points off its highs. Now, that sounds like a lot, but really, we probably need this thing to drop another 300 points before we would label this as like a market correction. When people talk about a correction, they're talking about a move of 10%, right? And we're not near a 10% move just yet. We're only probably about halfway there. But again, if we got to that 10% move, then you would say the market is in a correction. If you ever get to a 20% move from your highs, then you're technically in what is a bear market. I know sometimes we throw these labels around, correction or bear market, but they do have real world numbers surrounding them. A 10% down move is a correction. A 20% down move, you're in a bear market. Let's move over to the NDX, the NASDAQ 100 index, and you can see its week was very similar to the SPX. It actually had a more exaggerated down move. If we take a look at last Friday's candle, which is this green candle, we finished the week around 25,000 in the NDX, and this past week we finished the week at 24,239. Like a 760 point drop in the NDX. That is a more than 3% move. That's like a 3.1% down move in the NASDAQ. A lot of that is because the NASDAQ is very tech heavy, including a lot of the AI stocks, a lot of the crypto stocks, a lot of the semiconductor stocks, and those particular sectors, those industries were hurt the worst this past week, so that really weighed on the NASDAQ. The index that did the best this past week, as far as, it had a down week, but it wasn't as exaggerated as either the S&P 500 or the NASDAQ 100. The Russell 2000, the RUT, the RUT, you can see if we take a look at the close of last Friday to the close of this Friday, it finished the week down, but just slightly down. It finished the week down around 0.8%. So the small caps were doing a little bit better this past week. For those of you following the Dow Jones, let's take a look at the DJX, the Dow Jones Index. It finished the week very, very similar to the S&P 500, down 1.9%, basically the same move as the S&P on a percentage basis. Now let's take a look at some of the market sectors. So obviously the sector that drives the market both up and down is always tech. That's the main driving force in today's markets anyway. And tech had a bad week. Right, so the XLK ETF finished the week down more than 5%. If we take a look at, let's go back here on the close of the Friday, 2 Fridays ago, and then the close of this past Friday, you can see a pretty sharp decline. That is a 15-point drop here in XLK for those watching the video portion of the podcast. I'm sharing some stock charts, but if you're not watching, if you're on the audio version, don't worry, I'm going to give you the numbers. Basically, tech had a poopy week, right? It finished the week down 5.2%, and that is what weighed down both the NASDAQ and the S&P 500. The market never stood a chance with the tech sector this week. Some other really bad sectors were XLY, consumer discretionary. When the market is weak, we've talked about this, when the market is in turbulent times, when people are worried, consumer discretionary does really poorly and consumer staples tends to outperform. So right now the market's weak, so you expect consumer discretionary to be weak. So XLY, the consumer discretionary ETF, finished the week down. Well, it finished the week down about 2.3%. Pretty nasty chart here. Another really weak sector. Let's take a look at XLE, the energy sector. Finished the week down about 2.8%. Two other sectors that had interesting weeks. I don't typically play the banks, but the financial sector was very weak, down 1.5%. Now, some of this, I don't know how many of these banks have much exposure to crypto. Some of them obviously do. Some of them are investing in AI stocks, quantum computing stocks. Still, interest rates play a major role with what goes on in the financial sector. But overall, XLF, the financial sector ETF, finished the week down 1.5%. XLI, which is the industrial sector ETF, also finished the week down about 1.5% as well. So with the market really weak, were there any sectors that actually had a positive week? Actually, there were. There were several that finished the week up. XLV, which is the healthcare sector. Now, healthcare sometimes can go its own way, so this is not unusual, in turbulent times that, some of the healthcare stocks are doing well. XLV finished the week up 1.8%, and similar to the healthcare sector, XBI, the biotech sector, which has had a monster run all year. We take a look at this chart every week, and this has just been insane. Since April, this thing traded down to around $66 a share, and it finished the week at trading at $116 a share. I mean, this thing has almost doubled in the last 7 or 8 months. This past week, the up move was a 2.3% move. Another sector we should take a look at is XLP, consumer staples. We mentioned consumer discretionary will do bad when the market is bad, right? And consumer staples will outperform, and that's the case here. XLP finished the week up 0.8%. Another sector that finished the week up XHB, the home builders, despite the weakness in the market, it actually finished the week up very slightly. It finished the week up about 0.8% as well. One final sector I want to mention, because this sector had a ton of companies report earnings. XRT, the retail sector, we had companies like Target, Home Depot, Lowe's, TJX, and probably a dozen other retailers report earnings this past week. So what did the retail sector do on all of that news? And Walmart was also included in that as well. Well, XRT finished the week basically unchanged. It finished down 9 cents on the week. So basically an unchanged week for the retail sector. So we talked a little bit about the weakness in the tech sector. What was the driving force behind some of that? Which stocks were the nastiest? Well, AMD was probably one of the drivers to the downside. AMD finished the week down $43. Just a monster drop. If you're looking at the stock chart, it is a waterfall, right? And what's interesting here, this is a 17% drop in 1 week in AMD. And the drop was so massive, it has completely undone that massive gap up it had about a month or so ago. Remember when it had the announcement that AMD and OpenAI were doing something? They had some kind of collaboration, and the market took that as very positive news, and AMD had a huge gap up. Well, we've completely undone all of that. We're back where we opened that day on the gap up. Another big tech stock that had a really ugly week, and this one you would expect, because we talked a little bit about, Bitcoin and Ethereum have been very weak. Coinbase is very heavily invested in the crypto markets. It actually finished the week down another 15%. It finished the week down $43 and change, the same dollar amount as AMD actually. If you take a look at its recent highs, it was just a month or so ago that Coinbase was trading at $402 a share. It finished this past week trading at $240 a share. That's $160 off of its share price in about a month. So if you're looking for something that is trading at a steep discount, Coinbase definitely fits the bill. Now, I don't know if the bleeding is over, because until we know the bleeding is over in Bitcoin, especially, I can't jump into this yet. I need to see a bottom, but this is way off its highs. If I actually zoom out on the chart and, take a look at the past year, there was a period just a few months back where it traded all the way up to $440 and change. So that's $200 off its share price from just, say, 5-6 months ago. Another really nasty stock is Palantir, and I mentioned this because I'm in this. I've been stuck in a strangle in this for a little while, and it has been ugly defending this on the way down. This past week, Palantir saw another nasty week, down 11%. It finished the week down almost $20 down on the week. And I have a strangle. I'll actually show you my position. I have just one contract, but I'm down several $100s on it, about 700 and change on that one contract of a strangle. Thankfully, I only had one contract because this is really ugly. Volatility expanding. I've had to roll it 5 times to defend it, and some of those rolls were probably at bad prices. And a lot of times when you end up having to roll constantly, like every day, every couple of days on something, your P&L on those positions typically looks bad. And that's the case with my Palantir position right now. Some other stocks we should mention: Meta. I'm in a Meta position ever since Meta reported earnings. We had the huge gap down on earnings, and it's just been a steady decline since then. Doesn't look like it's found a bottom yet. I will say, as weak as the market was this past week, Meta only finished the week down about 2.5%, which is almost a nothing move when the overall tech sector was down more than 5%. So is that a sign that Meta has kind of found a bottom here, maybe found some support here? Possibly. I hope so, because I have a put credit spread in Meta that is deep in the money because of earnings. Played this for earnings. I've got the 670 short put, and Meta was trading at $594 at close on Friday. So I am $76 in the money on that short put, on that $10 wide put credit spread. So I certainly hope Meta finds a little bit of support here and starts going back up, because I could use it. One final stock we should talk about, because it reported earnings, Nvidia, right? That Thursday was all about Nvidia. So Nvidia reported after the bell on Wednesday. So when it opened on Thursday morning, it opened up huge, 196 and change. And that was a gap up of about $10. And then from there, it sold off and the market sold off. And finally, NVIDIA finished down, traded all the way down at 180. Wow, so that is like a $16 range on that day. And then, of course, on Friday, it sold off even more, traded all the way down to 172 and change before finally rallying a little bit. It finished the week trading just under 179 a share. But for the week, NVIDIA finished the week down about 6%. Moving on to some of the crypto markets, let's take a look at IBIT. So I keep mentioning Bitcoin. Bitcoin's a problem, right? This chart here, this is nasty. IBIT finished the week down 10%. So another down 10% week. We've had a few of these, right? This is a really, really ugly chart, and I don't know if it's going to stop, because I have seen no sign of this stopping. I was actually in some strangles in Bitcoin and IBIT specifically through some of this move, and I got out a couple of weeks ago, and I'm glad because I could see that something wasn't right here. At no sign on the way down did this thing look like it was going to turn around. And you know, you got to sometimes trust your instinct, intuition, or sometimes just what you're seeing on the chart, right? And this chart, yeah, I can't get long Bitcoin right now. I've got to see something drastically change in this before I get back on the bullish side. ETHA, which is the Ethereum ETF, looks just as bad, if not worse. Ethereum finished the week down 12.5% on the week. If we take a look at /BTC, which is the Bitcoin futures, we can actually see that we were trading at 128,000 and change in the Bitcoin futures a little more than a month ago. And when we got down to trading at $81,000 and change on Friday before the massive rally, it finished the week at 85 and change, but still from 128,000 to 81,000 at one point last Friday. That is just a monster decline in price. And if you're looking for something that is beaten up, I mentioned this with Coinbase because it's crypto related, same thing with Bitcoin, same thing with Ethereum, you know, the actual cryptocurrencies. If you're looking for something that's trading at a steep discount, these products are trading at a steep discount. I just would caution people, don't jump in on the bullish side just yet until you see something actually change. Otherwise, there could be some more pain to this trade to the downside. And if you jump in, especially if you jump in a big way, and there's still more room to the downside for these things to fall, you could get run over a little bit. And I don't want to see anybody get hurt in these things. Taking a look at the precious metals, if we take a look at GLD, which is the gold ETF, this tracks the gold futures, you can see gold really didn't do a whole lot. With the stock market moving around, with crypto moving around, gold really didn't go anywhere this past week. It actually finished the week down 0.4%, kind of a nothing kind of move where gold has been really volatile lately. This past week, it kind of took the week off. SLV, which is the silver ETF, this tracks the silver futures. This finished the week down 1.4%, so a little bit more of a down move in silver, but these weren't the stories this past week in the market. This past week was all about tech and crypto for the most part. If we take a look at the dollar index, let's take a look at UUP, which is the dollar index ETF. The dollar finished the week up 1%, right? So that was a pretty nice increase in the dollar. And of course, because of that, you would expect that the euro would be down. So if we take a look at the 6E futures, you can see nothing but red candles this past week in the euro, and the euro is the major component of the dollar index. That's like half the index is the USD euro relationship. If we take a look at 6B, which is the second biggest component of the dollar index, the British pound also had a pretty nasty week. And finally, 6J has been weak for like 2 months, right? Ever since the elections back here in early October, where all of a sudden the yen really started dropping, it's just never stopped, right? It has just been a freight train to the downside in the Japanese yen. Now, I typically don't trade the currencies, but if you're looking for something that is kind of beaten up in the currencies, the Japanese yen might be one to start nibbling a little bit to the long side. I don't know if I would jump on it. Yeah, for me, there's so many more interesting things to trade other than the currency futures. It's not something I often trade. Let's take a look at the bonds. So I'm going to take a look at TLT, which is the 20+ year bond ETF. You can think of this as the ZB futures in ETF form. And TLT finished the week up about 0.7%. So the bonds actually finished positive on the week, which is a good note because we do need bonds to go up. The higher bonds go, the more likely that the Fed will potentially give us that December rate cut. So that is a good thing. Taking a look at the energy futures, or in this case, let's take a look at the ETF versions. USO, which is the oil ETF. This mirrors the or tracks the oil futures, the crude oil futures. USO finished the week down about 3%. If I zoom in here, this candle here is last Friday's candle, and you can see from there to the close of this Friday, we finished the week down about $2 and change, which is a pretty big move in USO because its last price was $69.28, and that's $69.28. So yeah, that's about a 3% move in USO. If we take a look at UNG, which is natural gas, this mirrors or tracks the natural gas futures. UNG finished the week up on the week. It actually finished the week up about 0.5% or so. So let's talk a little bit about earnings for this week. So there's not really much of interest as far as most of the companies reporting earnings this week are low liquidity, really wide bid-ask spreads. They don't have great option markets. And for me, I want to trade options on these things. And so a lot of these aren't great for options trading. Also note, this week is an abbreviated week. It's a holiday week. So it's the Thanksgiving holiday on Thursday here in the United States. And because of that, it's a federal holiday. It's also a stock market holiday. The stock market will be closed all day Thursday. And then on Friday, they will be open just a half a day. Typically, what the stock market wants to do, what Wall Street wants to do, they're going to have the Thursday holiday, and then you got Saturday and Sunday, the weekend, you got that Friday in between. Well, why don't we just take a 4-day holiday? The stock market doesn't allow that. The exchanges are not allowed to be closed 4 days in a row. There's rules against that. They have to open at least for a short time on Friday. So on Friday, they'll open a half a day. Very little trading is going to go on. And also because of Thursday and Friday, basically the market being closed, there's no earnings Thursday or Friday this week. There's really no earnings Wednesday either because earnings after the bell on Wednesday, well, you'd have 5 days basically until the following Monday to do anything with your positions. So it's kind of an abbreviated earnings week as well. The only thing of note, well, I'll just talk about some of the more interesting ones, and these are barely interesting. ZM, which is Zoom. Let me zoom out on the chart so you can see the last year or so of its trading. It's got some decent range, some decent two-sided action. IV rank of 64, but the bid-ask spreads on the options chains are a million miles wide. You really can't trade it. But Zoom does report after the bell on Monday for those interested. Before the bell on Tuesday, you've got some interesting stuff. BABA, which is moderately tradable. If you want to trade some options on BABA, you could do that before the bell on Tuesday. BABA has come off a little bit of its recent highs, but it's still, I would say, trading at the higher end of its range at 152 and change. I mean, this thing was trading back at the beginning of the year. BABA was trading at $80 a share, now trading at 152 a share, but it traded as high as 192 a share just about a month and a half ago. If we go to the options chain, just to check the option markets, the bid-ask spreads, 50-cent wide bid-ask spreads. For me, I'm going to leave this alone. Some other things that report before the bell on Tuesday alongside BABA: ANF, which is Abercrombie and Fitch; NEO, KSS, which is Kohl's; BBY, which is Best Buy; BURL, which is the Burlington Factory Stores; and DKS, which is Dick's Sporting Goods. So you got a lot of retailers, kind of smallish kind of retailers. The markets, as far as the option markets and all of those products I just named, aren't great. Now, Tuesday after the bell, we have a pretty interesting one to trade. Dell, DELL is the ticker. Now, Dell, this had a huge run up. If you take a look at the stock chart from April until in late October, this went from around $67 a share all the way up to $167 a share. It got caught up with some of the AI hype, right? So everybody was buying stock in Dell. But the option markets in this are also really, really wide. The bid-ask spreads, I mean, you've got some dollar wide bid-ask spreads, 70-cent wide bid-ask spreads. For me, I can't trade anything like this. I'm going to leave this alone. Also, after the bell on Tuesday, you have Clean Spark Energy and HPQ, which is Hewlett-Packard option markets, and those are not great. And then the only thing of note reporting before the bell on Wednesday is DE, which is John Deere, trading nearly $500 a share. So you already know the option markets in this are not going to be great. Actually, they're not too bad. You got 70-cent wide, $1.60, which is tighter than you would actually think for such a high price stock. But for me, again, I'd leave this alone. And that is it for the earnings, because again, the rest of the week, Wednesday after the bell through Thursday through Friday, nothing's reporting the following Monday morning either, I don't believe. Again, just because of the holidays disrupting all of that, companies avoid reporting earnings during that time. So let's talk about some interesting trade ideas for the week. Well, now that we're past some earnings, Target reported earnings this past week, and it still has a little bit of IVR even after the earnings. So Target, we actually talked about this on the previous Market Outlook episode. I said sell a strangle in Target for earnings, and if you did that, great. You probably made some money. If you didn't do that, guess what? You can still go sell that strangle in Target because it still has a IV rank of 28. The IVX in the January cycle, 37%, which is pretty good for a retailer. You can still go sell maybe the 12 delta put and maybe the 10 delta call. So in this example, it would be the 75 put, the 105 call. You would get 136 credit on a buying power reduction of only $876. The risk reward looks good. The pop on the trade is nearly 80%. The P50 number is 90%. All signs point to go on that trade. Another interesting trade idea. Let's take a look at MU, and let's actually take a look at the stock chart. So MU is Micron, had a monster down week. I mean, this stock was just straight to the moon, up every day for what seemed like months. I mean, this thing, if I zoom out a little bit, if we go to, let's go to April, it was making lows somewhere around $63 a share, then traded all the way up to $260 a share. Think about that, $60 to $260 in the span of, 7-8 months or whatever, that time frame is. Just an insane move. You don't get moves like that hardly ever in anything. But, I guess the bloom is off the rose, because then it quickly this past week went from 260 down to $193 a share at one point on Friday, but it actually finished the day on Friday at $207 a share. But still, that's about $50 or $60 off its highs. Is it time to do something in Micron? It has a huge IV rank of 82. It has an IVX of nearly 80% in the January cycle. Now, Micron still has to report earnings on December 17th, but that's still more than a month away. So you could still do something in the 55-day cycle, and you'll probably be out of it. If the trade works out, you'll be out of it before earnings. So you got enough time potentially to do something like a strangle. When you see really good IV, you could get really wide on this strangle too. You could go sell the 10 delta short put, which you'll get a 360 credit on a buying power reduction of $1,400. But of course, with IV being really high, we need to go sell a call too. And we can go really far out of the money on the calls. We can go sell a 5 delta call for another $1.30 in credit. That's the 360 call. So the 145 put and the 360 call, this strangle is 1,000,000 miles wide. And we get nearly $5 total credit on a buying power reduction of just a hair over $2,000. That is insane. Now, is this a risky trade? Sure, because Micron had a huge move up recently. Maybe it reverses and starts going down in a big way and kills your put, or it keeps going back up here in a minute, finds a bottom and goes straight to $350 a share or something, and now your call is in trouble. Certainly all of that could happen. That doesn't mean it will. As a matter of fact, I would say it's probably unlikely. I would say this is a reasonably safe trade on something that has pretty good IV. The pop on the trade is 86%. The P50 number, 95%. So think about those probabilities. And if you're comfortable with the risk on the trade, risking about $2,000 in this case, because remember, the buying power on an undefined risk trade is what the broker considers a real world max loss possibility on the trade. They're thinking, $2,100 or so will probably cover your losses 95% of the time or more. So that is why they've chosen that as the buying power. So for me, I like that trade. And one final stock I want to mention, this is not something I ever trade because I don't think this is a legit company. I've never traded it. I've always thought it was kind of scammy. And that's Strategy, which used to be MicroStrategy. MSTR is the ticker symbol. This thing has gone from $460 a share to $170 a share without blinking an eye. This has been from July, this particular move. So it's basically had nothing but down days ever since July. And is it going to stop? I don't know. There's really some serious weakness in Bitcoin and Ethereum, and I don't think those moves are over. They haven't signaled they're over. So Strategy, which is mainly just a crypto company, that's all they do. They just buy Bitcoin and hope it goes up, right? Well, it hasn't gone up, and this company is in a lot of trouble. Because of that, this is not a trade I typically would do, but this might be one I do a lotto ticket kind of play on. So let's go to the weekly cycle. And I know this is going to sound crazy. Because of the holiday, let's not go to the weekly cycle because this would expire on Friday. Well, you could put it on, but you need to manually take this off Wednesday. Don't let it go to Friday, but you could put it on and just know, hey, Wednesday before the close, take it off because you don't want to face an assignment situation here. But what I'm thinking is doing an out of the money put debit spread because I think this thing is going to fall. So let's play it for a fall. Well, let's actually buy the 155 put, which is the 20 delta put. Maybe go $10 wide to make this thing a little cheaper because I don't want to pay $3.25 for that put. This is a low probability trade, right? It's a lotto ticket. So let's take a little bit off by also selling the 145 put. So a $10 wide put debit spread. I'm paying $158 for this. Now, $10 wide, 158, that means my max profit is 842, right? Because 10 minus 158 equals 842 max profit. And could Strategy go from 170 to 145 by the end of the day on Wednesday? Because that's when I really want to manage this. Well, if you're looking at the chart, I mean, we'd only have to get down to about here on the chart, which the chart is waterfalling in a serious way. Is that something that is worth playing? Possibly. Now, because of the holiday week, I mentioned you may not want to play this, you're not in the 6-day cycle, to avoid this weird situation where, I mean, the stock market will trade. I keep forgetting it will trade half a day on Friday. So you could manage on Friday if you wanted to hold that. So it's not too bad, but you could also just go to the 13-day cycle and we'll do something similar. Doesn't look like everything is trading here as far as they've added some new strikes. So I won't put on the example in the 13-day cycle, but I would do something very similar. I would go buy that 20 delta put and then make it about $10 wide. And I would try to get somewhere around $8.50 on me risking about $150, right? I want to pay about $1.50 for this lotto ticket play. And if I win, I get $8.50. So that's it for this week's edition of Market Outlook. For those of you that want to check out my book, The Super Wheel Option Strategy, if you're watching on YouTube, you'll find a link in the show description. This book, it's published on Amazon. It's about my favorite option strategy, which is the wheel option strategy. For those listening to the audio podcast on platforms like Apple and Spotify, please give the show a 5-star rating. It will help us grow in the algorithms because the show needs all the help it can get, right? All right, guys. Peace.